Hello traders out there in Traderland, my name's Des here at Grok Trade, and it's Monday, December 5th, 2011. The day was bullish today. We have the Dow up at 1 point over 3 digits, closing at 78 points, or up 0.65%. S&P doing better, up over 1%, 1.1% on the Nasdaq. Russell's up 1.63%. Banks closing at 1.65% in the green, very good. Gold down 1.5%, silver down almost 2%. Crude oil at break even, and the US dollar at break even. Trend closes at 0.34. Significant chance of a reversal taking place here, gang. If you're watching the news this evening, you'll hear that stocks fight to hold their gains after the S&P warning. I'm reading a part here. It says the U.S. stocks are giving back some of today's gains on news first reported by the Financial Times that the S&P could put several Eurozone nations on, quote, credit watch, or credit watch negative, end quote. While the other reports say that all 17 countries will be put on alert. Well, I say the reason we retraced is because of what we've been looking at forever. You cannot ignore technicals. I mean, after all, if we zoom in here, we have these two blue trend lines coming together, giving us a symmetrical triangle. So when we bounced here, it happened to bounce from this up leg at a 61.8% Fibonacci to the perfect level for the bull flag to stay intact. So of course we rallied, and then we busted the bull flag upper trend line with a huge candlestick. Is that by accident? No, not at all. It's because it had to if it's breaking out of a bull flag. So it confirms the bull flag to the upside. However, we have this big blue trend line coming across, which happens to be where the 200-day simple moving average also comes together. Today, we rallied higher, higher, higher. We get past that 200-point line there for a short time, and we got to 1266, almost 1267 today. That 200-day moving average is at 1265. This trend line 1264 coming down. We stayed there forever. In the last part of today, we come crashing back down. When I say crash, it's a intraday mini crash, but we're still up for the day. But here's the bottom line. We hit support here, rallied up. Now we're at resistance. This resistance, we're not seeing this resistance because of any news that came out. We're seeing this resistance because of the technicals. We're seeing this resistance because it found resistance there back in July, here in October, again in November, and now we're in December and we're seeing it again. It's not by accident. But with this formation, these two magenta lines, we do have a bull flag that has been confirmed. In a symmetrical triangle, when you look at these two blue lines, what we're looking for is either a massive breakout to the upside or a big drop to the downside. Anytime moving averages coil together like you see here, look how tightly these moving averages are coiling together. The telltale sign that the markets are coiling, and this is building strength. Always remember this. Stocks hate to be pinched, and it's getting pinched within these two blue lines. So once it gets pinched, it's like a wet watermelon seed. It will want to pop out or pop down. So we're waiting for that big movement. As far as the economy is concerned, we do have some good economic indicators out there that's been coming out. However, there's some underlying issues still out there, such as the Eurozone, such as China and their banking system. There's a lot of issues out there, and it wouldn't take much to kill the confidence of the markets to see this drop back down hard. So many of you know I'm an institutional trader, and in that account I have put on a trigger to add some shorts to these trades if in fact we start to drop down here. I do not want to give back profits on this big rally that we had, so I like to hedge myself. teachmetahedge.com is a website you can go and check out. But the teachmetahedge.com. Teachmetahedge.com. It's a website you can check out, something I put together. But anyway, I love to hedge, especially in areas like this. What I'm looking for is either a big breakout above this trend line, or I see it's drifting back lower to this trend line. So let's watch these markets very closely. Right now, crude oil is right around $101. Gold right now, 1724 is where we're at. And I thank you for being a part of this growing and big community of traders that we have here. So you're part of thousands of traders each day that come to the website, and tens of thousands each week. So thank you for being a part, and thank you really for taking the time to share us with a friend. There's a little like button down there below. Check that if you'd be so kind, and leave a comment. Actually, the new website is matter of fact, we have beta testers in there right now on the new website. Exciting things. And with the videos on our website, you'll be able to leave comments below those. So we look forward to that. All right, there you have it. Take care, safe trading, and remember that in the world of trading, capital preservation comes before making a profit. Always remember that. Take care. And one last thing, I will be doing a mentor talk talking about the benefits and our mentoring program that's coming up here this month. If you want to know more about that and you want to know how it might benefit you, it would behoove you to let us know. Just send me an email at mentor@groktrade.com. I'll make sure you get an invite for Wednesday evening. Take care. Safe trading.